Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time, and Brent crude oil is trading up over 0.5% in early Asian trade today at 71.58. WTI is at 67.73. So we have sort of fallen, had our big fall, our big drop off earlier in the week after the news on the weekend that Israel had attacked Iran, but the outcome appeared to energy markets and most financial markets that the worst case scenario had been avoided, and so no issues for oil supplies. And now we've kind of plateaued. We seem to have dropped to the floor of that geopolitical risk premium. Let's kick off this morning with Laurie Hatayan, MENA Director, Natural Resource Governance Institute. Laurie, my question to you is, have we oversold the idea, overinterpreted that there is no longer geopolitical risk in the Middle East? I mean, Israel is crushing northern Gaza. That's no exaggeration in terms of language. Lebanon, Israelis tanks are pushing deeper and deeper into Lebanon. Is this geopolitical risk gone from the markets?
So good morning, Sean, and to all. I do believe that it is gone because there is clarity in the ways of doing this war. And definitely most of the time, it wasn't the issue of how much destruction is happening in Gaza or how much destruction is happening in Lebanon. That wasn't the risk. The risk was always like about what the reaction of Iran would be, and therefore what the reaction to the reaction from the US will be. And this is where everyone was putting their own analysis on the oil sector and what will happen to the oil sector in that case. What we've seen until today is like there is very calculated replies when it comes to attacks between Israel and Iran over the past year, and it intensified as well, or like the involvement of Iran intensified in a calculated way again after the death of Hassan Nasrallah in Lebanon, again under the pressure of the people of Lebanon that were really upset by the reaction of Iran. So Iran had to step in more, but again calculated. So this calculated retaliation response from both sides, the Israelis and the Iranians, has given more evidence to the market that there is no serious escalation that will affect the oil market. And therefore, this is why we see that there is kind of a relaxed attitude. Yes, prices go up, down, but it's not that. No, I don't think that we are like, or anyone is thinking about like something that will go beyond this controlled war between Israel and Iran. The rest is unfortunate what is happening. The rest, like total destruction in Gaza, and now total destruction that we're seeing on the southern villages of Lebanon, but that is not taken into account by the oil market or any kind of even like the international community is just sitting and watching the destruction that is happening. I guess everyone waiting for the new administration in the US to see what will be the direction and any kind of ceasefire. And after the ceasefire, I think realities will hit about, are we going to be able to do the reconstruction that everyone is talking about? Is Israel going to allow for reconstruction? Because most of the Israeli accusation is that under all villages there are tunnels that are targeted against Israel. So what kind of reconstruction are you expecting? Limited or no reconstruction? All of that is going to come even uglier. It will be after the end of the war in the region, since now everyone is talking about possible ceasefire and possible political initiatives and the political solutions.
Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, welcome. If the geopolitical risk premium is now sort of dissolved out of this market, we're at 71, give or take, on Brent. Uh, what are the fundamentals then that underpin this price? We were at 71 before this recent Iran Israel face off occurred that sort of took up all of October. Now that it's sort of over, as Laurie's indicated, and we're back to where we started the month. What are the fundamentals, the macro outlook here going into November? China economy weakness, U.S. economy strength. Where do you see the sort of macro fundamentals that underpin a $71 oil price?
Well, I think in the first place, it's going to be what does OPEC Plus do in terms of restarting some of the extra production in December. That is obviously very important. It's a little bit of a knife edge decision for them. On the one hand, if they push it back yet again, you've got a situation where people say, well, you may be forecasting demand holding at this sort of level for this year and for next, but your actions are speaking louder than your words. On the other hand, if they go ahead with it, will markets say, well, we're still getting increased supply from non-OPEC, so maybe we need to push this down through.
I know, but that's why I'm asking you the question on behalf. I'm asking you on behalf of OPEC Plus, what should they be looking at? What is the macro picture? Are we going into a sort of ever increasing easing cycle on the Fed and monetary policy? Is China's stimulus going to do what it needs to do in order to revive demand growth there? I mean, where is the macro look, do you think? I mean, OPEC is trying to read the tea leaves on that like anybody else. What should they be reading?
Well, what they should be reading is the Fed isn't going to cut rates in the sort of way that people have been anticipating because the US economy doesn't need it. When we get the GDP numbers today, I think there's some downside risks to headline, particularly given the trade numbers that we saw yesterday on the goods trade balance, a whopping $108 billion deficit, which suggests that all the evidence we have from port traffic is there's been a surge in imports anticipating Trump tariffs. So it will be a little bit artificial, but gross domestic sales, final domestic sales to domestic buyers basically should be very solid, close to 3%. That's a lot better than anywhere else. So the Fed doesn't really need to do that. On the other hand, we've got the Eurozone looking at basically a structural recession, which is basically born of the fact that its ability to supply its own energy, be that refining capacity in the hydrocarbon sector, be that getting renewables more onto the grid, is just not working. And in terms of China, I think in the long run, yes, a lot of the things will work. But what we have to also divide up here is there's a structural change in China. If you look at road freight, they are moving much more to LNG fueled trucks. There's much more in the way of EV vehicles on the roads. So their oil demand is basically at a peak. There's no doubt about that. I'm not sure if it drops off as dramatically as people think, but I think the other stimulus measures are going to, it's a question of perception. This one, very simple. Is it going to be the sort of pickup in growth that people want to see, i.e., growth getting back to 5.5%, 6%? No. Should it stabilize, as is basically the Communist Party's intention? Probably yes. The problem of the property market, however, is still a long time in resolution unless they go for something far more dramatic along the lines of the Resolution Trust Corp in the late 80s, early 90s in the US. What they're doing at the moment is just passing the parcel.
Let's welcome to the table one of the leading voices at Kepler, who has been with us recently at our forum in Fujairah, and we certainly had a very interesting conversation there. Victor Cotona, head of oil analysis at Kepler. Victor, we have headlines out this morning from the Saudi Aramco CEO saying that oil demand is set to average at 104.5 million barrels per day this year, and rising up to 106 in the fourth quarter that we are now 1 month into. And he describes it as a balanced market. What are your thoughts on his comments, on his data numbers for this market to be balanced and averaging this year 104.5?
Well, I think I agree with the overall sentiment. The market is balanced. Is the market as strong as would be insinuated by these words? Well, it most certainly isn't. Basically, just to assume that global oil demand would grow by 1.5 or 2 million barrels per day next year is very much the upper limit of where the consensus actually is. I would maybe even say that it's out of bounds for the market consensus on how strong the market could be. For Saudi Aramco specifically, I think 2025 might be a year of reinventing itself, basically the entire company. Of course, Saudi Arabia has very ambitious plans to diversify away from oil. But a key thing is that in a period, and 2025 will be exactly that period, when you have low refining margins, everyone is getting squeezed. The refiners are no longer able or even willing to buy as much crude as they can. What you see right now in the market is that people start to nominate less Middle Eastern term supplies. There's a general proclivity to move into spot markets. Can Saudi Aramco catch this? Because this is not a reflection of a strong market. This is exactly a reflection of demand slowing down and people just counting every single penny so that they can turn the profit, so that they can still be profitable. So the market can still be strong. Saudi Aramco can still perform well, but it needs to adapt. It can no longer just project an image of everything is going well and everything is under control. I mean, most certainly it's not, but there needs to be a time of adaptation. There needs to be a time when the Chinese customers can be talked to in a direct manner, because Chinese state-owned enterprises are cutting their term nominations into 2025. So do I share the sentiment that the market is balanced? Yes. But I only share that sentiment with the caveat that the OPEC Plus doesn't bring back any supply into 2025. I think right now the situation that we have is that demand growth next year is roughly equivalent to non-OPEC supply. Anything that OPEC Plus does when it brings back production into the market would effectively depress the price. And that's
let me just ask you on that. I mean,
yeah.
That's due in 1 month's time now. Does the current price, as we've just discussed, the geopolitical risk premium has been drawn out of the market, and now we're at $71 on Brent. Does that, do you think, is that already embedding the announcement that OPEC Plus will increase supply on December 1st? That $71 has bedded that in. That expectation is inside the $71 oil price. More oil coming on December 1st. Or do you think that is still to be reflected in the oil price?
Well, that's a very good question. And to be honest, the real answer, I mean, having talked to a lot of people across the universe, is that I would say people are still split 50-50 between those that think that OPEC Plus would bring back production in December, and the other 50% thinks that they will not. So basically,
sounds like the US election.
Exactly. And but there is a part of the price that you see right now is a reflection of 50% of the market actually thinking that the prices would get depressed by an OPEC Plus decision to bring back production. Well, the question is, what if they don't bring back the production? I mean, to me, this sounds that the December Brent contract, especially the first week of December, would immediately see an uptick, because all of those who have been betting on that happening have effectively been caught short-handed. I mean, nothing will happen. It's the same production target in 2024 and in 2025. So I think that if someone wants to play around that sentiment, right now it's a 50-50 split market. It's partly built into the prices, but not fully. So there might be quite a lot of volatility in the first days of December.
Laurie, your thoughts on that? I mean, obviously it is the next big question. Will Saudi Arabia, will OPEC Plus proceed with and follow through on what they've already announced publicly, that from December 1st, production will be increased? There's been murmurs that they may still abandon that, as they did previously. It was meant to be October 1st. Now it's December 1st. Your thoughts on where OPEC Plus strategy is now going into the end of the year?
Definitely we've seen, so when you say it's a balanced market, so why would you shake
I didn't
that?
say it.
No.
The CEO of Aramco said
Exactly.
it.
I'm saying, like, if the CEO of Aramco says that it is a balanced market, so why would you shake that balance and bring back more to the market? And then if as Victor said, it's 50-50 about, like, is the bringing back is baked in it or not. So that means that 50% it's not. So it means, like, once you're going to bring back the more oil, so then you might have a decrease in prices. Already these prices are really stressing the budgets of the countries. What I think is, and then you had, like, other statements saying that we are going to go after the market. We're not interested anymore in bringing the prices higher. Maybe that is out of this despair that whatever has happening, the prices are not going up. And then we have to live in a world where the prices are as low as this, or maybe lower. And for I think, if you want to balance between keeping the oil industry and the energy transition, if you want a pressure, I think, like, having these low prices, it's a kind of an encouraging sign for everyone to take action, especially for the OPEC plus countries and for the region. And I say it in a way that when we are seeing what we are seeing, the statements that are coming from Saudi Arabia saying that our investment funds are going to use the money, the funds are going to use the money internally, and more investment in country, because we do need to invest and diversify the economy, and that requires a lot of money. So we want to get that money instead of investing outside. That's a sign of where they see the economy going, and where the oil demand is going, and where the prices are going. And then the other side is, like, when you have countries like in Iraq, they don't have that cushion, and they don't have that much money outside, like, what they get and they spend. So then that is for them to start really reforming their economies and really, like, being more efficient in their spendings. So on all sides, from rich countries or, like, poor countries financially, it is a good sign for us to have these low prices to advance the energy transition agenda. So at least from that side, I can speak that OPEC Plus, because needs to acknowledge and keep acknowledging that the transition is happening, and not looking to the small signs that say that, no, this is not going to happen, and then cling into some signs of, like, no, we will still need oil and gas, all of that, and spend it. Whoever can spend on and bet on that is doing it, but there are other countries that are not able to do that, and they really need to take action. So I see it from that struggle, at least for OPEC Plus, from the transition pressure, and from the balanced market going forward, maybe even.
Mark, the situation in Europe, we are a week away from the US election. How big of a outcome could it have? What are the bearings for Europe and for the geopolitics of Europe, and consequently from the sort of geopolitics intersection with energy security? I mean, that has been one of the biggest transformations in Europe since the Russian invasion of Ukraine, the energy security and policy of Europe. Now we're on this doorstep of a US election. It strikes me that the outcome that the markets are predicting, i.e. a Trump outcome, we're not seeing that reflected in the political posturing of Europe. Or I don't know, am I wrong? Your thoughts on the US election, what it means for Europe and for energy security in Europe?
Well, there's little doubt in terms of the general attitude at European government level that their greatest fear is a Trump victory, and above all, a clean sweep for the Republicans. They are better prepared than they were last time. There's no question about it. In 2016, last time they were literally caught napping. This time they've already basically lined up a whole series of counter tariffs, some of which will be effective. But in terms of energy, the fact of the matter is they need that US LNG now that the resources from Russia aren't there, and not everybody can just import from Norway. Yes, there are other solutions in the long run, above all from West Africa. There's no question about that. But that's the long run. That doesn't really make any difference. The bigger problem in Europe is no one is agreed internally. So we've got, what would they agree on in terms of their attitude if Mr. Trump wins? I'm not sure they can come to an agreement. What will they agree on in terms of terminating Russian gas supplies? Well, they can't agree on that in any case. There's been so many exemptions made. So Europe is basically a victim of its own indecision, its own disagreements, its own very, very diverse sources of energy for power. And this is where the fundamental problem lies, that you can't apply something from the EU Commission level down to national governments, because every government has a different consideration. Whether it's in Poland, here in Poland, that they have a lot of coal supply, they're opting for a nuclear option. In France, they already have nuclear. In Germany, we've got total chaos and basically a coalition which threatens to fall to pieces at any moment, and therefore they can't make any decisions. So the big problem for Europe is, I don't think that they actually can come to an agreement on what they should do. At least what they can do to respond to Trump tariffs is settled. But in terms of energy supply, they really need to look to their laurels, because at the moment, most companies are screaming that their energy costs, despite the fall that we've seen, are way too high, particularly given the inflation that we've had impacting wages, and they just can't be competitive. And as
do you think that Europe could resist a Trump imposed settlement in the Ukraine, Russia, that favors Russia?
Well, the question is, do they want to stump up whatever is not supplied by the United States in terms of armaments, in terms of cash? Are they in a position to? Can they agree? Again, that's an area which they're not agreed on completely. So they are in a very difficult position. If we go down that route, though, I would say that, if basically Trump strong arms Europe basically into accepting a Ukrainian peace settlement, we know basically what that basically looks like. Give Russia the land that they've taken, then we are in a totally different situation globally in terms of geopolitical risk, because we've basically green-lighted any aggressor to do whatever they feel like. And that's the reality of the situation, and that changes a lot in the long run.
Well, that's what's happening in the Middle East. Let's go to the survey question and see what the view of the room here is on this question of what's priced into this $71 Brent. Have oil markets priced in OPEC plus supply increase on December 1st? That's what it's announced. That's what is happening today as of October 30th. That's what is the policy of OPEC plus. But has the oil markets priced in this? Does $71 Brent reflect more oil supply from OPEC coming on December 1st, or is that still to be bedded in once it's actually confirmed? Yes or no is your up to your vote there. Victor, I wanted to get a sense of, we see today, it seems rather cute and quaint as in a way that Reuters are reporting that the oil market is a little bit buoyant today because of inventories. It nearly seems like the 1980s. We're talking about these simple things of stocks and so forth. But a joke aside, where does those fundamentals play in? OPEC Plus has always targeted a kind of 5-year average on inventories as their target for sort of managing the market, as they call it. Are inventories relevant? Are they low? Are they high? What's your view on these things?
Well, I think inventories are a good talking point if you have nothing else to say. But in real terms, they don't really sway the pricing much. They might sway something, the changes from 1 minute into another. In the longer term, it doesn't really matter. Why? Just look at the United States and the SPRs. Effectively, the SPRs have been drained to a level which which we have not seen in 40 years. Was there a significant impact when nothing was happening to those SPRs for more than a year? I mean, the pace of the replenishment is very low. Effectively, from the 180 million up until now, the committed volume is 55. And that's it. And basically, the Department of Energy has run out of money, so it won't be more. This is the last SPR replenishment or solicitation that we would see under the Biden administration, and we don't even know the Trump policy on SPRs. And I don't really think that it had a significant impact. Also, there's one notable difference between inventories and inventories. There are two types. The most drained category of inventories are the government-controlled strategic petroleum reserves. There seems to be a general idea that in an environment or in a future where the global economy just consumes less crude, the governments don't really need to rebuild their strategic stocks, most of which, most of the, OECD or G7 countries have released some form of stocks in 2022 as an immediate response to all the supply disruptions that we have seen. Most of those countries have not replenished them. Are the actual stocks of the commercial side of things, so effectively the refineries, the ports, the pipelines, is that strained? And you would actually see that we're pretty much 2021 level. So the actual industry, the refiners, the traders, everyone around us is working with normal levels of inventories, whilst the governments have effectively strained their capability or their ability to bring more additional SPRs into the market in case there's another supply disruption. So there's a little bit of a risk there, but I think the market has stopped trading or stopped speculating on that risk whatsoever. People just look at the inventory numbers. Yes, it's low. I mean, what can we do about it? It's low. It has been low for the past 2 years, but nothing's changing really.
Laurie, similar question as I add to Mark there about the outlook in the Middle East. I mean, the Trump arrival, if indeed he is re-elected, I know nobody in Gaza would care too much because they've been pummeled to literally death by the Biden administration. So no, how worse could Trump be? But where do you think the outlook for the region is if Trump was to return? Will it make any difference? Is it a game changer? A lot of people speculating that Netanyahu is playing the long game until that happens, and then he has an even bigger green light. Your thoughts on the election result and the implications for the region?
Look, first, let's start with the US, I guess. In the US, it's very interesting what we're seeing. We're seeing that there are a lot of the Arab origin Americans that are supporting Trump and saying he promised to bring peace to the region. On the other side, you see that the Democrats' campaign is based on saying that we do understand that the those who have that Arab origins might see it very difficult to vote for Harris because of her position on Gaza and Lebanon, especially on Gaza. Lebanon is a forgotten case. I don't know why, unfortunately, but they're saying that, but that look on the other side, Trump is worse. This is their only excuse, saying that why they should vote. So this is when it comes to the Arab votes in the US, divided, I guess. The same goes to the Middle East. Like if you are Iran, you wouldn't want to have a Trump administration. You would do everything not to have a Trump administration because during Trump, you saw what we saw. They moved out of the JCPOA. They would put more sanctions. They killed Soleimani. That was a game changer for the military apparatus of the Iranians and for the proxies in Lebanon, Gaza, and other places. So for them, definitely, Trump is not good news. On the other side, you would see that, so for them, a Harris administration that could be a continuation of the Biden administration is very good for them because look what's happening. Kind of the US administration is protecting Iran against Israel for different reasons. So that they would like. For the others, there could be that no, Trump, Harris is a disaster for them because then again it will be like supporting Iran versus the others, so they would prefer Trump. So looking at the two powers today, between like Israel would definitely favor, maybe favor a Trump administration, Iran would favor a Harris administration, and this is a kind of the division that you see in the region. But both those who favor those who are supporting Iran and what Iran is doing in the region, they would want to see a Harris administration. The others, they're like, yes, Trump, but we're not even sure because, as you said, Sean, you said that the EU is fearing
It
that
sounds like
Trump
Pennsylvania. The Middle
Trump
East is a swing state.
Yes, it is. It is because look, you said that here in the EU we fear that if Trump arrives, like he might impose a peace deal that is in favor of Russia. The same, I guess, like for the region is like, okay, what will Trump do? It's not that Trump is not predictable. The Harris administration most probably predictable. Trump, you never know what direction is going. What does it mean? Yes, I will bring peace to the region. What kind of peace are you going to bring? Maybe it's not always a positive peace,
Yeah,
you know.
yeah.
And knowing what he did with Palestine and Jerusalem, all of that. So kind of like wait and see, I guess, until
Well,
the
that's certainly
November and
the
after
only
that.
choice we have. We can't vote. We can do nothing as
Exactly.
the outer parameters of the Roman Empire here. We simply gaze and hope that Rome sends us something decent. Have oil markets priced in? No, 60% to 40 more or less. I think I probably agree with that. And as Victor said, it's kind of a market caught between a rock and a hard place there as to how could this go further if OPEC plus, could this fall, this drop we've seen in recent days continue? OPEC plus decided in early September to suspend or postpone their increase, and the market didn't react too much, but it didn't fall any further, really, a momentary fall, and then sort of held the current ground. Does that need to be repeated in order to hold this current ground, that they have to suspend for longer or not? Thank you so much, guys. Laurie Atayan, as always, brilliant to have your insights from Brussels. Victor Katona from Dubai, really great to have you at the table, Victor. And Mark Oswald in Poland, the new leader of Europe, it seems to me. If Mr. Tusk can get out from under that president, then maybe Europe will have a leader, as it doesn't have at the moment. Meloni seems to be filling that space. We need someone else. Thank you, guys, and we will catch up with everybody tomorrow, same time. All the best. Brent up a little bit, but little change really after the big drop on Monday. Thank you.
Thank you. Bye.